Hello everyone and welcome to my channel. So today I will be explaining the trade that I took on the London session and why I took it on the London session. So first of all, if we go to Forex Factory, we can see that there is a lot of news at 8 a.m. Okay, so at 8:15 we have the Euro news, at 8:30 USD news, okay, then Euro news. So today there is a lot of news at the NY AM session, New York AM session. So what I like to do when there is a lot of news, I'd like to see volatility during the news, but I'd like to position myself during the London session. So what I did is I had a daily bias. We had a recent swing formation on Wednesday, on yesterday. As you can see, we had a swing formation and we had 50% retracement, which is in this fair value gap also. Okay, so what I was anticipating for Thursday is bullishness. Going into the hourly chart, since I knew my daily bias, I go for the hourly chart to see the higher highs and higher lows and wait for retracement and enter on the retracement. So what happened is we opened at 12 a.m. So this is the session open, not the session open, the midnight open of the New York time, and we were retracing. While we were retracing, we were forming also the swing point. So I have this swing, okay, right here, and in this swing we have this fair value gap and we have this order block right here. So we have a lot of confluence in order for us to position ourselves into a bullish trade for today. Now, going into the 3 minutes, as you can see, this is the retracement, and we were in the London session at 2 a.m. until 5 a.m. So what I noticed on this 3 minutes chart is that we have a swing formation right here. This is the swing formation on this hourly candle, on this bearish candle. Then we started to form the second hourly candle, which was I was anticipating to form the swing point in order to push higher. And what happened right here is we had some retracement, but we didn't have shift in market structure. We had the retracement right here into this small fair value gap, but we did not break this swing point from the other from the other hourly candle. Then we started pushing higher. So what I noticed is that this candle right here, I was live, okay, watching live, so it pushed lower, then immediately rejected. So what I did is, after the hourly close, I was not anticipating price to break this low, not even this low. So what I did is I entered the trade. There was 6 minutes, okay, there was 2 more candles until the hourly candle closes, but I entered before the hourly candle closes. But what I should have done is waited for shift in market structure, hourly candle to form. We have fair value gap right here, entry right here, and stop loss right here. But because I have another confluence with which is a major swing point, short-term swing point, and short-term swing formation, so it's like a head and shoulder formation right here. I entered with my daily bias bullishness, with a retracement into the fair value gap and 50% area into the OTE between 62 and 75 and 79. and this order block right here. I had a lot of confluence to enter the trade, which I did. I entered the trade right here, my stop loss below the swing point. Okay, I should have put my stop loss below this area right here, but uh, I like to be more safe because it can sweep liquidity right here before it pushes higher. So I put my stop loss below this area. As you can see, this is my entry, this is my execution, and my first target was the swing high, which is a liquidity, easy liquidity right here. I took 70% of my position right here. If you go into paper trading, you can see that I took 70% of my position. I was risking 1%, took 70% of my profit right here, and my last target was this swing point right here, because it was in the fair value gap, daily fair value gap, and swing point equal buy side liquidity in the fair value gap. Okay, so as you can see, this is the fair value gap. We have this high right here, hourly high, swing point, target if we are bullish. Okay, so this is the trade. I was risking 1%, as you can see, and going into my Excel sheet, if we want to see, we made 161 in profit, $161. Okay, so this is all paper trading, but when I get into the 8% profit, I will be going into the real challenge, prop firm account challenge. Okay, so these are the comments. Today did not have a lower time frame entry. It was based on the daily bias and the 1 hour time frame. Okay, I made 161, which is equal approximately to 3%. As you can see, we do this minus this, we know how much we did on this day. And I will not be trading today another trade, as you can acknowledge that we have a lot of news at the AM session, and there is a lot of volatility, and both markets can be dangerous. That's why I had my targets. We ran into my targets before the AM session, but even if we did not hit our target, our second target before AM session, I will always be waiting for some retracement. As you can see now, we are retracing on the hourly candle. So this is the swing point. We can be retracing into the 50% area of the hourly candle, into this fair value gap, into this order block. Okay, we can be retracing in order for the NYAM session to be bullish and take a lot of swing points. Okay, but I will not take more than one trade in one day, even I had the opportunity, because 3% per day is enough for me. Okay, and I will be hitting my target soon in the next week, and I will be starting my prop firm account challenge at the next month, which will be the month number 8. Okay, so I think it will be July, August, I think. Okay, so these are the steps that I'm taking. First of all, I need to be profitable on the paper trading account. I'm risking 1% of my total account balance. Okay, even if I have a drawdown of 10%, maximum drawdown of 10%, so my actual equity is 500, but I will be risking 1% of my of my whole account balance in order to make up to 3%. My profit is not specific, it's not fixed, it's not 1 to 3 risk reward ratio as I mentioned I will be doing before, because I will be targeting the swing points, okay, on the hourly candle, because my entry is based on the hourly candle. So I want to see a retracement into a fair value gap, an order block, a swing point, okay. Then I want to see a swing formation on the hourly the hourly chart, and I will be targeting the swing points on the hourly chart, but I will be executing my entry on the 5, 3, 1 minute chart, okay. So this is the first day that I feel comfortable with my trading, because I did not focus on my entry, because I have a lot of techniques to enter, but I focused on my daily bias and on my hourly candles, okay. So what I like to see is a lot of confluence into a lot of charts. So for example, I execute my analysis on the daily chart as same as I execute my analysis on the hourly chart, as same as I execute my analysis on the lower time frame chart, and this is how I proceed into my daily analysis to see how can I enter or how can I have an opportunity to take a trade. This, in my opinion, was a good trade, but not a perfect trade in my opinion, because I did not follow a specific model entry. For example, we have here a fair value gap. So this is the 2022 ICT entry model, which I've had this entry right here, and my stop loss would be below the candle that created a fair value gap, okay. So this would have been my entry, my first target would have been right here, okay, and my second target would have been right here, which I could have made more money, okay, I could have made a higher percentage, but I entered on another technique, which was the intermediate swing point, short-term swing point, short-term swing point, which is very similar to head and shoulder, but we have a narrative on the hourly chart and on the daily chart. So it's very important to have your analysis based on the daily chart and another higher time frame chart, and your execution on a lower time frame chart, in order to hit a higher risk to reward ratio. So it was a decent trade. I feel comfortable now trading because I have a specific type of trading, which is swing formation on the hourly retracement, okay. So another trade could have been on the higher time frame, which would have been from this high, this low, and my target would have been this 1 to 4 risk reward ratio. Swing formation targeting the liquidity plus the daily target also can be done. So you can enter on any time frame. It's very important to have a daily bias, okay, a higher time frame analysis, and to have time, okay. So I executed on the London session. It's very important to know which session you are entering and the higher time frame narrative. If you like this video, please don't forget to like and subscribe, and see you in the next one.